Hi everyone and welcome to my weekly update with me, Richard Perry, market analyst at Hantec Markets. Each week I take you through the key events I believe will be driving your investments in the coming days. Now, moving into this week, we've got a load of central bank meetings, basically which will be dominating the economic calendar. This is the final throes of trading into 2017, and we've got a Fed rate hike on the horizon. It certainly seems as on Wednesday the market has completely and utterly priced in a rate hike for the Fed of 25 basis points. I think that's not really the pertinent issue. What is important is the outlook for inflation and rates going forward into 2018. At the moment, or certainly the last time we had the Fed projections, we had 3 rate hikes potentially in 2018. Will that still be the case? Will they sort of cut the potential terminal rate? It seems as though inflation is still really subdued. We had average hourly earnings on Friday, which didn't really shoot the lights out again. Seems as though they are still struggling to generate inflation, even though it seems as though unemployment is bottoming, and this is a real issue going forward. So can the Fed continue to remain hawkish? Now, I think the big impact of this will be on the yields and the yield curve. Certainly, I always tend to focus on the 10-year Treasury yield, which remains subdued underneath 2.7%. It cannot break out above that level, and subsequently we're seeing this yield curve continuing to flatten as a result. Now, will this flattening continue, or can the Fed start to generate a bit more oomph to this rise in the 10-year Treasury yield and help to steepen the yield curve once again? It'll be a key factor, I think, for the markets through this week. But we've also got the Bank of England not expected to move on rates, having increased interest rates last time out, and also the ECB as well, which tweaked its quantitative easing last time. Not expected to do a great deal this month, though, in the final meeting of the year. Now, we're also having Brexit factors as well. Now, the UK and the EU came to a deal on Friday. The market is sort of lukewarm on the deal at the moment. Certainly it looks as though it's questioning whether the deal is going to actually unravel on that Northern Irish border issue in due course. But at the moment it is holding firm for now, and it's expected to be officially sort of rubber stamped by the European Council this week, which means that we can move on to trade negotiations, which is the really important issue, certainly for the UK side anyway. So how are these all affecting markets? Well, the major markets that I look at, certainly euro-dollar, is sort of forming fairly much more of a neutral outlook. It seems to be sort of breaking a lot of trends, both higher and lower. Momentum indicators increasingly neutral, and also moving averages flattening off. So it doesn't really do a great deal for medium-term direction. You're sort of finding support around about, or you've got support in place around 17.15, with resistance at 19.40 to 19.60. Now, these are 2 key levels I think that we'd be looking out for on the Fed and the ECB later this week. Can we see some volatility that breaks these levels and starts to drive a bit of direction? For cable, as I said, Brexit is still a key factor. We've seen a breakout on cable in the last couple of weeks. Sort of retreated back towards the 33-35 breakout and an uptrend as well. Can these levels hold? This is key near term. If it breaks to the downside, you're looking at sort of 32 area. But yeah, it'd be interesting to see if this support can hold, because that would sort of maintain this little buying into weakness angle that we've got on cable at the moment, with a view to the fact that the sort of moving the trade negotiations forward would be positive for sterling. Now, in terms of your dollar yen, we're still seeing the market ranging over sort of a multi-month range, although it is more of a positive outlook and a positive bias within that range, having broken up above 113 big figure. Sort of now reopens the tops of the range, 14.25 towards 14.70. Can that move to the upside continue though? It certainly seems there's a little bit of a retreat on Monday morning, but is this a buying opportunity once more? The Fed is again going to be key for this one. So indices are looking to move strongly to the upside, certainly in the wake of the Brexit negotiations. But again, is this a key move that can be sustained? We've seen the DAX, which has sort of been sort of moving around towards the tops of its 4-week trading range. Can it break out to the upside? It sort of tried on Friday, failed, and again sort of pulled back a little bit today. Not entirely got that rocket fuel yet that it needs to move, and a close above 13,210 would certainly drive the market higher. But again, can this move be seen? Now the S&P 500 has sort of found a bit of support and looked to sort of move higher. But can this market now again look to retest the all-time high 2,665? FTSE 100 remains a key negative correlation play with sterling. Every time we see sterling moving higher or lower, we see the opposite move coming through the FTSE 100. Again, that's happening on Monday morning, and we've seen 2 strong days of FTSE 100 gains as sterling has retreated a little bit. Again, is this a key move? Can it break out? Well, FTSE 100 has a pivot resistance at 7,450. Again, this is a key level that the market needs to break through. So, in terms of commodities, on your commodity currencies, on your commodities, you've got the gold price that has been under pressure as this dollar has been strengthening. Now the Fed will be looking to, I think, still try and maintain a little bit of a hawkish tilt in the monetary policy meeting this week, and that would sort of start to put pressure more back on the dollar to the on the gold price to the downside once more. 1260 was a key breakdown on gold. That implied 1220. Again, will this market continue to pull gold lower as the dollar strengthens? It certainly looks like it's going to be the case, and if the Fed can sort of help to steepen the yield curve, that would help to drive gold lower as well. On the oil price, we've had that OPEC meeting, which helps to sort of underpin oil prices to an extent. However, does that come at the expense of the US rig count? Because US production continues to rise, the rig count is going up. That suggests that the US producers on the shale side are helping to fill the gap that OPEC producers are leaving. So that doesn't do all that well for upside potential in the oil price. So throughout this week, we're looking at central banks, but we do still have UK and US inflation data. UK wage growth as well will be key. But all these central banks that we've got throughout this week will be massive for volatility, I think, through forex markets especially. So with that in mind, I wish you good luck in your trading, and I will speak to you next time. Thank you.